Thank you for tuning in and welcome back, team. In today's episode of Real Estate Advice, you'll learn about 6 mortgage scams exposed and how to avoid them. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. Okay, team, so let's talk about this. You're going to be seeing and hearing a lot of mortgage scams out there, especially as the market keeps picking up. It's a strong seller's market. Whether it's a strong buyer's market or even a normalized market, you're always going to hear of mortgage scams. There are certain things that you can listen for and be aware of so that you don't fall victim and fall prey to an unscrupulous loan officer. So let's go ahead and talk about this. The number one thing that people will fall prey to is when a loan officer says, "We will not charge you any points or fees." Well, that's kind of interesting because nobody's going to give you, as a home buyer, anything for free. No one's going to give anything to you for free as a home seller. Nobody gives anything for free, period, right? There's always a hook somewhere. So why is this advertising line effective, right? It's effective because it's telling you you're going to get something for free, and a lot of people fall into that. But again, nothing is free. Generally, the same people who are going to work on your loan, no matter who the loan officer is, you're going to have support staff, you're going to have a processor, you're going to have an underwriter, you're going to have a management team, then you're going to have a closer, you're going to have, so they're going to have an office, they're going to have expenses and overhead, so they can't exactly give you something for free. So how do they advertise this and make it seem like it's free to you, right? Well, what happens is those loan officers actually increase your interest rate, which raises their margin on the loan. Hence, when we say they raise their margin, they're earning more profit over the life of that loan. So is it a good idea for you to get this type of loan? It's up to you. At the end of the day, can you get a loan like that? Yeah. But almost any lender could give you this kind of an option. So, I mean, there's a lot of different options in home loans, and it's about having a loan officer that's going to be honest with you and upfront with you and explain your different options. But to use a bait and switch hook like we never charge points or fees, when that's just not the case, because they're going to be charging the interest rate to pay for that, then you should really know that's what you're paying for, right? So the second thing is we pay the mortgage insurance for you so you don't have to. Okay, this is going to go back to nobody's paying anything for free. So now what are we looking at, right? And first of all, it might be a little bit interesting to you to know what mortgage insurance really is, right? So the way that mortgage insurance works is that it's a policy that protects the lender in case you, the home buyer, can't make your payments, and if the lender forecloses, they cannot recover all of the money. So all lenders do require mortgage insurance if you have less than 20% loan to value in your home. So if you're not making a 20% down payment, you're going to more than likely be having mortgage insurance on any kind of loan that you're looking at. So when we move forward on this, how does this work if they're saying that you're not going to pay this and that they're going to pay it? Again, it's going to go back to your mortgage interest rate. They're going to raise the interest rate a little bit and use the extra margin on the loan to pay for the policy themselves. So there's still a mortgage insurance policy on your home loan, and you are still paying for it, but in a different way. Depending on how long you keep your home, by billing the rate, that's what they often call it, billing the rate, increasing the rate. Depending on how long you keep your home, that's going to cost you several $1,000s, depending on how much they had to increase your rate. Again, does this make sense to you? It depends on your actual situation. I mean, different people have different situations, and it's just about having clear-cut and open dialogue and communication with a reputable local lender that's going to be able to explain your options to you and how this stuff works. The bait and switch line, we pay the mortgage insurance for you so you don't have to, isn't cool because it makes you think you're getting something for free. The third scam, the one weird trick to pay off your mortgage faster, is refinance into a 15-year loan or a 3-to-1 adjustable rate mortgage, right? Yes, that will definitely shorten the life of your mortgage and help you pay it off faster because you've taken a 30-year mortgage down to a 15-year mortgage. Well, that's kind of interesting because you're also going to have a higher payment on that. You're going to get a lower interest rate in a lot of cases, but you're going to have a higher monthly payment on that. So if you already have a really good interest rate and you have already bought a home, then unless your interest rate that you're going to be getting next is going to be so low compared to what you already have, then what's the point? You can always just pay off your 30-year fixed mortgage if that's what you have on your home by simply making additional payments onto the principal every single month, and you'd be accomplishing essentially the same thing here by making additional payments, right? So there's no need for you to refinance, and there's no need for you to tack on extra lending fees onto the backside of your loan. when people get approached about refinancing homes as a homeowner, what happens is they say, oh, well, we can refinance it. It's not going to cost you anything out of pocket. Okay, in some cases this is true. It won't cost you anything out of pocket because what they do is they put it onto your loan balance. So if it costs $10,000 or $5,000 or however many thousands of dollars, because it will be thousands of dollars when somebody refinances your loan, let's say that it was $10,000, and let's say that you owe $230,000 on your house. You want to refinance to get down to maybe half a percentage point lower, and you had to buy a point. And for reference, whenever lenders talk about a point, it's actually an eighth of one whole point. So 0.125, that's actually a point in lender math. And that 1 point will cost you 1% of the loan value. So if you have that $230,000 home, 1 point cost you $2,300 to drop it, and you refinance your loan with them, guess what just happened? Well, you just bought a point, and now it's included into the backside of your loan. Instead of owing $230,000, you now owe $240,000. In this example, where you might have bought a point, and then by the time you did the refinancing cost into the loan, your $230 just went to $240, and you gained a little bit lower of an interest rate, maybe, right? So think about that whenever you think about it. It's a lot easier to actually just double up on your payments if that's your situation. It's a lot easier to take little small bites out of your monthly mortgage by simply making extra deposits onto the principal every single month, okay? So the fourth thing that happens is we have really low rates, and we have no point, no fee loans, and we have 30-year loans. I bet you've heard that one on the radio, on the television, maybe on some of the YouTube adverts in the front of different videos. I bet you've heard this one somewhere before or seen it in print, right? Here's the thing. Again, oftentimes the rate that's being quoted is for a 15-year mortgage with points and fees, or it's a 3-to-1 adjustable rate mortgage, which is generally the lowest quotable interest rate that can be promoted, right? So here's the thing. 3-to-1. I've said that now a few times in this video, or 5-to-1, and you probably heard it somewhere before. Adjustable rate mortgage. What does that mean? That means that once you exhaust that term of that 3-year period, then you're going to have a balloon payment that's going to go up there, and you're no longer going to have that interest rate, and it's going to go to the prevailing rate of that day. So if today's rates are prevailing around 5 to 5.5, depending on where you are and what your circumstances are across the country, well, and you did a 3-to-1, and in 3 years from now, maybe the prevailing rate is 7 or 7.5, your rate just got bounced up a whole heck of a lot. And that's how a lot of people got themselves in trouble in the collapse of 2008 and 2009. Just for reference, be very, very cognizant of what you're choosing, and don't fall for the gimmicks that people are throwing out there. We have extra low rates. You don't have to pay points. You don't have to pay fees on the loan. No origination charges. No one's giving you anything for free. They're all going to build a rate, and they're all going to make their money. Trust me. So the best thing that you can do is do some research and have a strong trusted real estate advisor be able to assist you in meeting a strong local loan officer that's going to be honest with you and share your options with you. Because in these programs themselves, there's just nothing really wrong with these programs. It's the way it's presented, and it's what it causes you to think. It's misleading and it's misguiding, as opposed to laying out all the facts on the table to help you have all the information possible so that you can make a decision that's right for you and that you're comfortable and confident with going forward for you, right? So the fifth thing that happens is people will say, call immediately and get our extra low rate of blank percent. Okay, well, beware of super low rates quoted in ads. In many states, an ad can also, in many states, the ad has to also include what's called an APR, which is the annual percentage rate. And if the APR, the annual percentage rate, is substantially higher than the quoted rate, is because they are charging you points and fees to get that rate down so that they can use it to attract you to that rate, and you may not be really thinking about all those backside costs. Again, earlier in this video, one of the example, the $230,000 property that just had an additional $10,000 tacked on to the backside of that loan for a refinance, $230 to $240 may not sound like a big deal, and on a monthly basis it may not be too big of a deal on your mortgage, but on an amortization schedule, paying off your home for the next 30 years, that's an issue. And a lot of things and something else that a lot of people don't think about when they refinance, another way that it looks attractive sometimes, let's say that you've owned your house for 7 years and you do a refinance to get a lower interest rate, or maybe you did a little bit of a cash out, or whatever the case may be, right? Well, you no longer have 23 years left on that mortgage if you if you had a traditional 30-year fixed mortgage at that point, you no longer have 23 years left. If you've been paying on it for 7 years, you now have 30 years, or whatever the refinance program is that you put yourself into. Think about that. Really, really think about that, because it really, really messes up a lot of people because they don't think it through correctly. So the sixth point and the last one that we're going to be making in today's video is to be aware whenever somebody says you can get an appraisal in 8 minutes or less, 10 minutes or less, 15 minutes less, or something like that. It's just not the case. You're not going to be able to get a loan pre-approval, a bona fide loan pre-approval in only minutes. It doesn't work that way. Here's why. To get a loan pre-approval letter, a loan officer must verify your income, your assets, your credit, and your employment verification situation. So here's the thing. With income, what are they going to be looking at? They're going to be looking at your pay stubs, right? They're going to want to, with assets, they're going to want to see your bank statements. They're going to want to see any investment accounts that you may have, any kind of assets that you have, essentially, right? As part of income, they're also going to want to be seeing the last 2 years tax returns and the last 2 years W-2s. With credit, I mean, that's a pretty quick one for them to pull and then review. And in employment, then they got to actually call your employer and get a verification that you actually work there, right? How's all that going to get done in 8 minutes? Unless all of your information was publicly available, including your tax returns, right? How are they going to get that information and do that in 8 minutes? It's impossible. That's why we have loan officers that help you out. Just be aware of that, because it's another one of those bait and switch that I hear going on the television, I hear it on the radio, I hear it everywhere, and it's just driving me bonkers because it's really screwing people up. And I don't want it to screw you up. So good on you for watching this video, making it this far into the video. So here's the thing. Now it's your turn to tell me what's on your mind. Tell me what was the most impactful point of this video to you. Was it point one, being aware of like bait and switch terms like we never charge points or fees? Was it maybe being aware of people that say, oh, the one weird trick to pay off your mortgage faster is blank, 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 blank? Or perhaps the last point that I made about being aware of people that are saying, hey, we can approve you in only a matter of minutes. Tell me which one was most impactful to you, along with any of your other mortgage scams that you would like to share with us in the comment section below. Now I'm going to go ahead and pop up my contact information. If you want to drop me a line and say hi, great, love to hear from you. Or if you simply need help finding a top agent where you live, please let me know. Now if you haven't done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know is going to be able to help. Thank you so much for watching today, team. And between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Make it a great day.